Okay, welcome to How to Become a Successful Day Trader. My name is Tyler Ballhorn. I'm the founder of Stockscores.com. I've been a stock trader for nearly 30 years. I've been teaching other people how to trade for nearly 20 years. And tonight's presentation will focus on the thing that I do most of the time, personally, which is day trade. The methodology that I show you transfers to longer term trading as well, but that'll be the focus of Thursday's webinar, same time, same place. What you see on screen right now is my desk, and I'm sitting at that desk right now, just to give you a sense of what I'm looking at when I'm trading through the day. You can see I have quite a few screens there. The two screens on the left are for running my active live trading webinar. Every day people can watch my trade signals happen in real time. The same screen that I'm watching for identifying my trades. Other people can watch as well. It's a service that we provide at Stockscores. Got a couple laptops there. I've also got a PC running some of those screens, and it's pretty much just watching those screens, waiting for entry signals, and we'll get into some of that this evening. So what is trading? Well, it's all about finding stocks like this, which move quickly and with relatively high returns for the day. This particular stock had an entry price of $40.70, closed the day at $43.76. Now that you might say is only a 5 or 6% gain, but with day trading we can leverage our positions 3 to 1, which means that this position made 15 to 18% in one day. And that is where we get those market-beating returns. If you can imagine just finding one stock a day that makes you 10% and being able to do that over and over again, very repeatable process, you can really get some good results. We don't only buy stocks. I'm also willing to short sell stocks. This is a short sell from today, actually. This is Hertz Rent-A-Car, and it moved, I think, 4.5% from the entry price of $16 down to $15.27. So, a 4.5% move, but triple that, because again, with day trading, the brokerage houses will give you 3 to 1 leverage. So you can triple the percentage return. Now we're talking about 12, 13, 14% in just a few hours. And so what I do every day is I've got an algorithm that alerts me to trading opportunities using my strategy, which I'll talk about tonight. And then I just make the trades as they come. And there are more trades than I can take. For example, today there was probably over 100 valid trades. I can't take that many. I don't think anyone can. We don't try to. It's just to show you that the trades are plentiful with my day trading strategy. They happen throughout the day. Most of them happen early in the day. And once they come, you can assess them, take the trade. You don't take every one. You pick your favorites and apply your risk management, and your exit signals will come as well. So again, those are the things we're going to talk about tonight. So my itinerary for this evening is to tell you a little bit about my background, how I came to be a trader, describe what is day trading. I want to teach you how I measure performance, because it's going to be very important for the discussion at the end of the presentation, where we talk about the specific performance of my day trading strategy. I'll explain my approach, sort of tell you what I do in my typical trading day, and then I'm going to give you a checklist of what you need to be successful as a trader. What will help you succeed? And then for those that are interested, I'll do a little bit on how I can teach you my approach. And then finally, we'll get into the real specifics of my day trading strategy, what the actual performance of it is since February. This is not based on anything more than math. It's every day the stocks that I list in my, or all of the trade alerts that happen in my live webinar where my subscribers are watching, I track all of those trades and I put them in a spreadsheet, and I'll show you those results. And we can even go into today's results. All right, so my story. How did I start trading? I started trading when I was 19 years old. I was a student at the University of Calgary studying business with a focus in finance. And I thought that I should learn a little bit about the market since I was studying that in school. And so I entered a trading game. And I did it I played that trading game the way I thought I was supposed to based on what I was learning in university, which was to find good companies, those that I thought were undervalued, those that had good growth, all of those sorts of things that we commonly refer to as fundamental analysis. And I used that to trade the market. I didn't do very well in the game, but I found it quite enjoyable and fun, and it got me hooked on trading. I also had some friends that I would hang out with on weekends who were into trading, mostly because we were all broke students. We mostly traded penny stocks and low price stocks. And I got the bug again from that. I traded a lot of junior mining and oil and gas stocks living in Canada. Those were the kind of stocks that were listed on the exchanges. I used to hang out at the Alberta Stock Exchange and use their real-time quote terminals, watch the trading floor. This is when they actually had a trading floor. It wasn't all computers. And, just loved it right from the beginning. I used to use those real-time quote terminals to apply my strategy because I didn't have real-time quotes myself. You remember this was back in the late 80s, early 90s. And so I would use their quote terminals, get the list of stocks that I thought had good potential, hop in my car, race home before the market closed, download data for the charts of those stocks because we didn't have the internet with websites that would give us charts in an instant like we do today. Back then, I had to download charts from a charting service, and I tried to get that all done before the market closed. I was living in Calgary, so the market closed at 2 o'clock. Try to get that all done, make sure that those stocks fit my rules, and then I'd phone a broker. I didn't go online to make a trade. I actually had to phone a broker back then. Phone a broker and say, okay, I want to buy ABC Mining Company. And I would wait on the phone while he tried to get the order filled before the close, and hopefully it did. And then I would know that I owned it, and I would write it down in a book that I owned that stock. And now I had to monitor that stock. So it was much more complex then, much more time consuming because the technology wasn't where it is today. But the actual approach wasn't a whole lot different then than what I do today. A lot of what I did then came out of a university class that I was taking where we studied whether there was evidence of insider trading activity in the stock market, specifically whether there was evidence of insider trading activity on stocks that were bought out by other companies, because when they were bought out, they would usually jump up in price quite dramatically. And we wanted to see if there was signs in the market that those stocks were trading on inside information before the news came out. And we found that they were in most cases. And I took the methodology, the algorithms, the math that we used in that class, and I built my trading strategy around it. And I applied it to penny stocks, and I basically paid my way through university, and I drove a fancy car and had lots of fun, and sort of got my start in investing. At the time, I was a student, but I was also working in a gas station, pumping gas, and that was my last real job. Once I graduated from university, I continued to trade the market. I started building websites because I needed tools for my approach. The tools weren't out there. Of course, the internet was in its infancy, and I needed specific types of tools that were using the math that I had come up with. So I needed the tools myself. So that's when I built the first website I had, which was something called Orex, Market Masters. And then out of that came another website, which you know today as Stockscores. And I've been running Stockscores since late 90s, probably. So why is trading a great occupation? Well, what I love about it is the flexibility. I can do it when I want. If I don't want to, if I want to go traveling, I can. I love trading, so even when I travel, I bring my computers with me and trade from wherever I am. I find it fun. I like the analysis of it. I like the action, the excitement. It can be quite boring at times too, but still there's a lot of excitement, and I find it enjoyable. I love the freedom it gives me. I can live anywhere. I've always grown up in Canada, but a couple of years ago, my wife and I moved our family to Maui for a little while. And then we got kind of bored of that. So then we moved to Whistler, where we like to ski and mountain bike, and we could do that. And the beauty of trading is you can really do it from anywhere as long as you can plug into a wall. And time zones are sometimes an issue. When I lived in Maui, part of the year I had to get up to open the market at 3:30 a.m. Of course, it was also done by 10. Depended whether it was daylight savings or not. But so you got to kind of pick your places to live based on time zone. And then of course there's the financial reward. You can make a lot of money trading if you know what you're doing, and if you like to travel or live in a big house or drive a cool car or whatever, I don't know what you're into. It can afford you that, but I really want to emphasize that if anyone gets into trading for the money, you're probably going to fail, because the focus on the money will cause you to be emotional about it. And you should really treat trading as almost like a video game, where you're just trading to win. You're trading to make the right decisions. You're trading to make the right moves. If you're trading to make money, I know it sounds kind of counterintuitive, but if you're trading to make money, you're trading for the wrong reasons. You should be making trades for the sake of the trade. The money will follow if you do it that way. So I always cringe when people say, how much money can I make in a week? Well, I mean, how much money can you make playing hockey? How much money can you make being a lawyer? Some people make lots, some people don't, because they don't do it right. You have to focus on doing it right. A hockey player focuses on being a good hockey player, not on how much money they're going to make. If they're a great hockey player, then they're going to make lots of money. But you have to be a great trader to make lots of money. And I want to really emphasize that, because trading is simple, but it's not easy, and it takes time to learn. So what is day trading? Well, my definition is that it's entering and exiting positions within a trading day. So you buy at 10 o'clock in the morning, you sell at 2 o'clock, you're out of your trades before the end of the day. And so you're really in cash overnight. And because you are in cash overnight, I consider day trading to be less risky than any other kind of trading, provided you are disciplined. Now, why is it less risky? Because overnight markets can gap. They can make big moves against you. For example, this morning, the market gapped down fairly significantly because of what is happening in Italy. And, if you own a large portfolio of stocks and it gaps down, the market gaps down 2%, that can mean a fairly substantial loss overnight without you doing anything wrong. You just got caught in a negative market position. When you day trade, you're in and out within the day, so you don't really get price gaps. And you can really control your risk. What is essential in day trading is that you control risk, because if you don't control risk, then you can blow yourself up also. So I really want to emphasize that although I say it's not as risky, that's assuming you are good at managing risk. And I teach a method for managing risk that is, I think, quite powerful and useful. But if you don't follow it, well, then your potential is there to have some bad days. Focus on stocks that are moving abnormally and are actively traded. That's my approach. I don't trade the same stocks every day. I trade a different list of stocks every day. And I'm focusing in on those that are behaving abnormally, that are breaking free from their correlation to the market, usually. And they're actively traded, so I can get in and out of them easily with good sized positions. I am indifferent about whether I buy or whether I sell short. For those of you that don't know what short selling is, it is borrowing shares from your broker. Let's say you thought that Nike was going to go lower, symbol NKE. You could borrow the shares from your brokerage, sell them. If it goes down, you buy them back at a lower price and return the shares that you have borrowed. Now, you don't actually have to phone your broker or ask to borrow them. Your brokerage's systems will allow you to sell short on most stocks, as long as they have the inventory to lend you. And today was a short selling day because it was a down day. That's where the money was made today, on the short side. And I'll show you the performance of today at the end of the presentation. Buying, I think in most people's minds, is easier, but it shouldn't be any different. Buying, selling short, you're always going to buy and you're always going to sell. It's just a question of what you do first. If you think the market's going higher and there's more buying opportunities, you buy and you sell later in the day. If the market's negative, you sell short in the morning and you cover your short by buying in the afternoon. So here is an example of a day trade. I have some indicators that I'll sort of talk about as we go through. There are these pink dots and these lines that get drawn. Those are called risk reward lines. And this is a strategy I apply every day. I typically myself do 20 to 30 trades a day. And I look for my Stockscores action candle indicator to fire and combine that with some other rules. It basically gives me my entry signals. Now, before we get into the list of what you need to do in order to be a successful day trader and performance and that sort of thing, I need to teach you a little bit about how I measure performance, because I don't measure performance in percentage gain or how much money I made or lost. It's all about reward for risk. So reward for risk is the following. If I buy a stock at $10 and I plan to sell it at a loss if it hits $9, and we always plan to have a stop loss point, then my risk per share is $1. If that stock goes up and it goes up to 13 and I sell it at 13, I have made $3. The reward for risk of that trade is 3 to 1. Okay, if I sold it at $15, then I made $5 for $1 of risk. That would be a 5 to 1 reward for risk ratio. If the stock goes down to $9, I have lost -1 RR. If I sell it at $8, I have lost -2 RR. All right? And so we don't necessarily set our stops at -1 RR. In fact, most of my strategies have a wider stop than that, but that's how we gauge performance. The number one goal in trading, the number one goal in investing is to protect your capital. Capital preservation is your number one goal. If you want to be my student, I'm going to emphasize that over and over again. Trading takes some time to learn. You have to start slowly with a small amount of risk because your number one goal is to preserve your capital. If you run out of money because you're a gambler and you are focused on the money perhaps, and you're trying to make $1 million in a week, you're probably going to go broke. The reality of trading is that the opportunities are plentiful as long as you got your head on straight. And you have to have a methodology for entering and exiting and managing risk. What we want to do is take relatively small losses, have bigger profits, and focus on the expected value of the trade, of the strategy. So you want a trading strategy where if you apply that strategy 100 times, you expect to make a profit, because the data that you've collected from the past shows that your rules are effective. We don't know if we are going to make money on the next trade, but if you have a good strategy, you should know that you will make money if you do 100 trades or 50 trades, even 1,000 trades. The more you do it, the more you move towards the probability of that strategy. It is like a casino who deals blackjack. They don't know which player at the blackjack table is going to win the next hand of blackjack, but the casino knows that if they deal 1,000 hands of blackjack, they will make money because the odds are in their favor. So you want to apply trading strategies that have a positive expected value. And I'll show you a little bit about mine later on. So here is a trade that I did last week. This is on an ETF that goes up when oil and gas goes up. The oil and gas stocks go up, not necessarily oil itself, but the oil and gas stocks. And so it's an ETF that basically reflects an industry, but it's triple leveraged, so it moves 3 times as fast as the industry. So if the energy sector goes up 1%, this will go up 3%. So you can see here a couple of things. First of all, there's my little pink dot. That's my Stockscores action candle. If you are one of my active trader students, I will give you that indicator. It's for TradeStation. You don't have to have it. You don't have to, you don't have to use TradeStation, because I have another way for you to follow my entry signals as well. Talk about that later. But some people use TradeStation. Some of my students use them, and I give them that indicator, and it will tell you when a stock out of the entire market is making an action candle. That action candle represents certain things in trading activity that tell me it has a high probability of moving higher. The lines that you see on that screen our risk reward lines. So this is our entry price. This is minus 1R. So that is our minus 1R risk. At this point, we're at plus 1R. At this point, we're at plus 2. And you can see that the stock went all the way up to almost 10. You can see there it says 10RR, plus 10. What that means is that if I risked $200 on this trade, it maxed out at a $2,000 profit. If I risked $100 trade, it maxed out at, well, just under $1,000 profit because it made 10 times risk. We use these lines for a few things. One, we use them to measure our performance, but we also use them to pick our exit points. People always say, how do you know when to sell? I use these lines and some formulas we have around these lines to pick my exit point. And in this particular stock, I would have exited right here at 8RR, which meant that for $500 of risk times 8 was $4,000 of profit. If I was only risking $100 times 8, then the profit was $800. Okay, hopefully you get that. And again, this presentation is being recorded, so you can always go back and watch it a couple times to make sure you understand those points. So my approach to trading is I'm a strategy-based or algorithmic trader. I want to take out human judgment because humans screw things up, myself included. We're emotional. We make trading decisions based on our wants for money, on our desire not to lose, instead of on the facts. And a computer will make or identify trades based on the math, and that's more reliable than human judgment. So I make trading decisions based on rules using my algorithms. I'll show you how that system runs a little bit. And all of my rules are derived from data. So I collect massive amounts of data, and I showed this at the last webinar as well. But here is all of the trade signals from today. They're not all entry signals, but many of them are. So these are all shorts, and they're all here. You can see May 29th. And at the bottom, it'll give me a summary. If I go, there's quite a few today. So there was 93 valid short sell signals between 9:30 and 1:30 today. And they earned 97 RR. It says 97,000, but that's because the risk amount is $1,000. And the average return per trade, average including the losers, winners and losers, was 1,050. Divide that by 1,000, that means 1.05 RR. And it represented a 3% return on capital for the day. That's without leverage, I think. Or maybe that's including leverage. Let me look at the formula here. No, that is including leverage. So what that means is that if you had $20,000 to trade with today, you could have made $600. You might have made more because you're not going to do all of those trades, but you are going to get probably the same percentage return, and that's the way to look at that. Okay, so my rules are derived from data, and we'll get into that in a little more detail later as well. So how does my trading day look? Well, all of these times on the screen are Eastern time. So the market opens at 9:30, and in the 15 minutes before the market, I look at the charts basically, and I try to assess what kind of a day it is going to be. So as an example today, maybe I can show this to you. Let me jump over to this screen here, and I'll just show you my chart that I use to assess the market. And I'll zoom in on this a little bit. So the market was going to gap down today. This chart that you're looking at is of the S&P 500 going back 10 days. Each bar on the chart is a 13-minute bar. And the market gapped down this morning. By gap down, I mean it closed there on Friday and it opened today down here. So it has a gap of price in between. And that was because there was some negative things happening over in Europe, with Italy maybe leaving the European Union and defaulting on their bonds. And if you listen to the financial news, you'll be aware of all that stuff. It doesn't matter why, there was weakness. And so in my pre-market assessment, I said, okay, we're going to be weak on the open, but we're going to be too weak. And that will mean that people will probably come in and buy at the open. And that'll send stocks up for a little bit. And then we may see them roll over. And if we then go back below the open of prices for the day, then we want to start going short. And I share that analysis on my daily trading webinar. So I come on about 5 minutes before the market opens. And today I said just that. Expect the market to bounce. I'd be a buyer on the open. And then if we roll over and move down through the open, so the opening price was right here, and it went below that at 11 o'clock, I think 11:01. So from 11:01 Eastern time onward, it was better to be a short seller. We had some decent buys, but they fizzled out as the market tumbled lower. And so the real money today was made on the short side. I plan all that before the day starts, and you have to make it conditional. Like, if this happens, I'll do this. If this happens, I'll do that. Because you don't know what's going to happen. You can only sort of gauge the different possibilities and how you should react to each. So anyway, I do that before the market opens for 10 or 15 minutes. And then I start trading at 9:30. I don't make my first trades until 9:32. I want to see the opening 2-minute candle do its thing. The majority of my entries come in the first 12 minutes. Today being a short selling day, we short sell longer. And so today was the day when you can enter shorts into the noon hour. Most days, if it's an up day, most days you're going to be done all your entries by 9:42. Days like today, you might take entries until 1:30 because it was just an abnormally strong day to the downside. And we're always going to adjust our approach when we take trades based on the day that we have. At 3:30, again, this is Eastern time, 3:30, half an hour before the close of trading, I do my search for longer term trades, stocks that I would hold for a few days, maybe even a few weeks. Those are called swing trades. And I have strategies for those built around the same indicator, the Stockscores action candle indicator. And then typically in the final hour, I will exit the trades that I have made that day, my day trades. Sometimes I'll exit them earlier, but that's only if there's a real noticeable change of trend in the day. So today the exit came at when the downward trend line was broken right about here at 3:34. That's really when we started to see the market rally. I was actually doing my post-market or my afternoon briefing on my trading webinar where I'm talking a little bit about the day and going over results and that kind of thing. And I was in some shorts and I had to actually scramble a bit to get out of them. So, and I vary my process based on market activity, but this is the general idea of what I'm doing. Now, some days, if it's an up day, I don't really do much after 9:42. I take my positions and I let them run for the day. Days like today, I had to work all day because it was a different kind of a day. But today's day was pretty abnormal. It doesn't happen very often where you get big sell-offs like that. All right, so now let's talk about our checklist for what you need. So the first thing you need is knowledge. Obviously, if you're going to do anything, if you're going to be a lawyer, you need to know law. If you're going to be a hockey player, you need to know how to play hockey. Trading, no different. You need skills. You need to understand the basics of the stock market. You don't need to know a lot about finance. I mean, I have a degree in finance. I don't use hardly any of it. It's not that important to understand finance or business. I think more important is understand human psychology. But still, you need to be able to speak the language. What's a bid? What's the ask? What's the offer? What's the, how to set up an order in a brokerage system. Those are skills that anyone can learn in a little bit of time. It's just you have to learn it. Then you have to learn an analytical method, he said, tongue-tied. You have to know how to analyze the market. Now, as Gandhi once said, there's 1,000 ways to the top of the mountain. My way of analysis is not the only way. I think it's a great way. And I've seen a lot of bad ways to analyze stocks, but mine is not the only way. What I like about it is my method is simple. It's based on logic, not on human emotion. And it's something that's accessible to anyone because doesn't require a lot of a lot of in-depth knowledge of markets or of industries. It doesn't require a degree in math. It doesn't require inside information. You know, like guys like Warren Buffett, they have great information. I don't have that kind of information, so I can't do his method. I need to have something that works, and my method works for me, and it can work for just about anyone as long as you put in the time to learn it. It's accessible, and I think that's what I like about it. Risk management, you have to know when to take a loss. All of these things are based on the analysis of data. Money management skills, how to develop a strategy. That's not super important because you can just take my strategies. I've developed them for you. But I think that there's something to be said about knowing how to develop a strategy so that you can appreciate what goes into it. And then there's just the mechanics of trading, getting your order entered into a brokerage system, when to buy, when to sell. If you've never traded a stock before, then that's where you're starting from. You got to learn those basic mechanical skills. Are they hard? No, but it takes some time and probably a little bit of frustration to learn those things. If you want to be a trader, that's where you got to start. Any one of us have had to do that as traders. Next thing you need is strategy. So when are you going to enter a trade? When are you going to exit the trade? How are you going to size your positions and manage risk? Those rules should be well tested. You should really understand the basis of them. Even if you're using my strategy, you should understand the theory behind them. And there's very good theory behind why they work. And I ultimately utilize statistics to determine what my rules should be. And I'm always modifying, not a lot, but I'm always tweaking my rules based on data. As the data comes in, and again, I jump back to this spreadsheet here, like there are thousands and thousands of trades in this spreadsheet that allow me to develop my rules because I've got lots and lots of data. And I can say, okay, if I tweak the rule to this value for that indicator, how does that affect overall profitability over 1,000 trades? And it makes it grow 10%. That's a good tweak of the rule. What if I do this change to the rule? That cut my profitability in half. I don't want to do that. So I'm doing that on probably a weekly basis. I'm collecting the data. My rules are simple. There's, like I say, 3 to 5 rules per strategy typically. They're not hard to understand. But the work that went into creating those rules and the knowledge that goes into creating those rules comes from years and years of trading. And so although they're simple, it wasn't easy to figure them out. And it's a lot of work to keep adjusting them because you got to collect data and that sort of thing. So next up, what else you need? Tools. You need to have a way to find the trades. It's all well and good to say, I should have shorted Hertz today. But if you don't see it until after the market closes, you missed the boat. So you need to have a tool to help you find those opportunities. So Stockscores is my website, and I created a tool on there called the Market Scan tool. We don't use that too much for day trading. Mostly that's for swing trading and position trading, which are longer term forms of trading. The tool that I use for picking my day trade entry points is called TradeStation. It's a US-based software company, and it gives me a platform that looks like this, and it's very flexible. I can write my own indicators for TradeStation. I can plot lots of charts, and I can actually program in my strategy rules. So if I bring up the chart for Hertz here, you can see these lines are drawn automatically. That's because I've got an algorithm that identifies the time to enter the short sell on that trade, as well as plots all my risk reward lines for me and that sort of thing. And so this is how I test and develop strategies using this platform. Once I've tested and developed them, I have another tool which you as my student can watch, which identifies the trades as they come up. So for example, Hertz at, what time was this? 12:02, I think. No. 12:02. So at 12:02, my computer gave an alert to say Hertz meets the criteria for the worm short selling strategy. Johnson & Johnson gave an alert at the opening 932 candle to short sell that stock. There weren't a lot of buys today really did well because it was a down day. I'm just trying to think of one. Well, there were some on the short side. So this isn't really, actually, that's not the one I want. I want SPXU. So sometimes when the market's going down, we can make money by buying simply by buying an ETF that goes up when the market goes down. Not sure why it's not plotting on there, but there was an entry signal there. See my pink dot there? And in this case, this went up while the market went down because it's an inverse ETF. It goes up when the market goes down. So you need a tool for identifying opportunities, Stockscores for longer term trading, TradeStation for day trading. If you don't want to use TradeStation, then you can subscribe to my webinar where you watch my screen and it will do all that work for you. I think everyone should have some sort of real-time charting program. Most brokers have that available to you. If you are with a brokerage, look into what real-time charting programs they have and what their costs are. Typically, if you trade enough, maybe 10, 20 times a month, they will give you that charting program for free. But there's others out there that are relatively low cost, anywhere from $20 to $100 a month for that real-time charting program so that you can view charts. But the best one is to get the free one from your broker. Order entry platform, so you need some way to buy and sell. That's your brokerage's platform. And again, if you're new to trading, you got to learn which broker you want to go with and what their platform is and how to use it. I help my students with that if they need it. You just have to ask. Then you need some sort of methodology for doing post-trade analytics. So I showed you my Excel spreadsheets where I'm tracking all the trades that I identify every day. I built spreadsheets to do that. At a minimum, you should keep some sort of a trading log. You can do that in Word or even in just a notebook, writing down the trades you took, why you took them, where your stops were, how much you made, how much you lost, what your risk was, all of those different things. You should put them in a journal of some sort because you will learn from it. You can go back and see, are there patterns that are causing me to not maximize my profitability? What can I do to be a better trader? And that comes from those post-trade analytical processes. And then we have the Active Trader Live service, which I'll show you in just a bit. I won't show you just yet. But that is my daily trading webinar. You're watching the same screen that I watch for picking my stocks to buy or short. So I've got some automated processes that are running, and it, down to the second, it tells me, okay, HTZ short signal now. And then I can, look at it if I want to, or I can just execute the trade on my platform. It's an awesome tool. It's taken me a long time to develop it. Spent quite a bit of money on it as well. And it's now working pretty awesome. If you did Active Live 6 months ago, it's changed quite a bit since then. We've got it working way better now. And I'll probably make more improvements to it, although I'm pretty happy with it now. All right, next thing, process. So it's not enough to say I will buy when A plus B plus C happens. You also need a process to identify the trades in a timely fashion and execute the trades in a timely fashion. Making sure that process is mechanical, very efficient, because you got to be fast, especially in the opening 10 minutes. And you want to remove all your emotion. Your emotion is your enemy. Your emotion will mess you up. So what we want to do is take all emotion out of the process as best we can, because we will do a lot better. And that is actually, even though it sounds easy, I just won't be emotional, it's a hard thing to do. You don't even realize sometimes when you're making emotional decisions, and you just have to follow the rules, because the rules are based on a lot of data. And as long as the market continues to be as it has been, which is what it tends to be. I mean, my strategy keeps working week in and week out, so I'm hoping it'll work next week, but really there's no guarantee. And if it doesn't work, then I got to analyze why. But like I said, it's been working great for a long time, so I'm hopeful. But the key thing is to remove the emotion. So my process, if I jump back to TradeStation, now I'm going to show you kind of the mechanical way to do it. I run a scan in TradeStation. I grab all the stocks that meet the criteria of that scan. I drop them into something called radar screen, which calculates for my indicators. It will tell me where there is a Stockscores action candle. And if there is, I look at the chart and I decide whether I want to buy it or not. So I'm just going to let this update here. Then you can see here's the time of the entry signal. So these are 9:32 on that first candle of the day. It's still updating. Well, it's going to take a little longer. I guess I don't have to wait for everyone to update. But once I have an entry signal, then I go take a look at the chart. So this is one that I bought today on the open. And this is actually an ETF that was going up because of the problems in the bond market. The bond market was going up, which means interest rates were going down today, all related to the issues over in Italy. And I would normally never trade something like this, but that's just the kind of weird day it was. So anyway, that's the process. Now, I just did that as a human, click on my mouse, cut and paste, all that sort of thing. I prefer to let my computer do all the work. So I have another screen, which I'll show you in a moment, that does that all automatically. I don't even have to touch my mouse. It's got macros running. It has automated strategies, and it will do all that every minute. Well, for the first part of the day, every minute, and then later in the day, every 2 minutes. And it will just give me the alerts as they happen. And you can watch that screen just like I'm watching that screen. If you take my Active Trader course and you subscribe to the Active Live service, you're watching the same screen that I watch on my desk that I showed you earlier. And it's awesome. It takes really allows me to focus in on just getting the orders filled instead of trying to analyze, because all the rules are built into the algorithm. So in terms of the process, we're scanning the market for Stockscores action candles. Those are the little pink dots. And if we jump back to TradeStation and just pull up this stock here, I just want to highlight this. See the little pink dot right there? So that's my action candle indicator. We then assess stocks for additional rules. There's not really much of that anymore. We used to have to do that a little bit more, but again, I've automated most of it. The only thing that I assess it for is whether it made a big gap. You know, if it opens up 15%, I'm going to shy away from it because it won't have a lot of upside anymore. Other than that, the computer will do just about everything in terms of judging the rules. Then we enter the valid trades. Now I say valid trades because not everyone wants to buy $80 stocks. Like that stock that I just showed you was an $83 stock, but those are more capital intensive. So in the process, my screen, again, I'll show you this in a minute. The screen that you're watching and that I'm watching, it will actually show you the capital requirement for the trade. And if you see one that just takes a ton of capital and you don't have a lot of capital, then just don't do that trade. Look for the ones that are more fitting to your capital limitations. And so one of the things about entering valid trades is we're going to focus in on those trades that suit us in terms of the capital required. And then once you are in the trades, then you're just monitoring for exit signals. And the exit method is just basic logic using those reward for risk lines. Most days we hold until the end of the day, sometimes the last hour. Like today we had to jump ship half an hour before the close because the downward trend line got broken. But for the most part, we'll hold until the last 10 minutes or so. And as I said, the Active Trader Live service automates that process for you. So you don't really have to do it anymore. If you took my course a year ago, you were doing this all manually. Now I really wanted to make it simpler for people, and Active Live really helps you do that. The other thing you need, of course, is capital. Whatever your risk tolerance is, multiply that by 200 to take the amount of capital that you need. So if you have a risk tolerance of $50 per trade, multiply that by 200. That's $10,000. You can do it with less. You're just not going to take every trade. You have to focus on the trades that are less capital intensive. So the lower price stocks, although not too low because they don't tend to work as well, but stocks in that $5 to $10 range don't often take more than a couple $1,000s of capital to take $100 of risk. And you just have to cherry pick them more and build up your capital base. And that's okay because it's going to take time to learn. You don't need to come out of the chute making 20, 30 trades a day like I do. I didn't used to do that many trades. I've got to that point because I've learned enough to be able to do that. And everyone should start off slow, Just take a few trades a day. Don't take a lot of risk when you start out. Remember, number one goal, capital preservation. So take time to learn, and 3 months from now, you can start to, ramp up your risk and ramp up your number of trades as you gain confidence and experience and success and that sort of thing. I want everyone to start with $0 of risk. People always say, how much money should I start with? You could have $5 million. I'm going to tell you to start with zero because I want you to practice. And you can practice in a notebook, on Microsoft Excel spreadsheet. I have a website, tradescores.com, where you can use our simulator to practice trading. But just practice. Why risk real money until you're experienced? If you're walking on a tightrope, you don't start by walking between two tall buildings. You start by walking on a tightrope a foot off the ground. That way, if you fall, you don't really hurt yourself. Same thing in trading. Start with a low amount of risk. And as you get good at it, ramp up your risk. So as I say there, increase the risk with success and decrease your risk with failure. If you have a bad week and you have a loss of -10 RR, let's say, scale back, analyze what went wrong. Maybe nothing went wrong. Maybe you just had a bad week. Sometimes that happens. And lower your risk tolerance until you get your trend going again. So what can help you succeed? As I said earlier, trading is simple, but it is not easy. You need to walk before you run. So it takes practice, it takes focus, determination, and discipline. You don't have to be a rocket scientist, but you do need to work hard on learning. You do need to have that focus to follow the rules and not miss trades. You do need to be determined because, like anything, you have to be tough and you have to be determined to learn it. And if you're a person who sort of gives up easily, I wouldn't get into trading because you have to be determined to learn it. Again, it's not hard, but it takes time to learn. And you really have to be disciplined. If you are a gambler, you might get lucky in the short term, but in the long term, you won't do well at it. Trading is a game that requires playing the expected value of your strategy, following the rules that you know work. And you only know that rules work if you've tested them or you trust that my testing is valid. And that's how you make it happen. So how to become a day trader? The way I did it was I taught myself. Back when I learned how to trade, there really wasn't anyone out there teaching people how to trade. There was a few books on futures trading, but there was no one on stock trading. And so I kind of figured it out on my own. It took me 8 years. I made a lot of mistakes, paid a lot of expensive lessons. It took a long time for me to overcome my emotions. And then one day it just kind of clicked. And it's the day when you lose fear and greed, I would say, that you can really start to do well. Now, the other way is to have someone like myself teach you. I've made every mistake in the book. Trust me, no mistake that you make in the future I have not already made. So if you ever are shy about asking me about a mistake you made, just realize that I've probably done it 100 times already. And so I recognize the mistake. I recognize why those mistakes happen. And I can give you some good guidance on solutions if you are one of my students and learn my approach from me. So the way I teach people is I have an online education center. It's got a series of online videos, assignments, tests, written components, and then it has the specific rules for when to buy and sell using my strategies. So the Stockscores website is where all that is found. You go into the trader training area, go to education center, and there's some free stuff. So if you want to take a look at the free, that's just videos that are free. But then we have foundation lessons, which is the theory. So there I talk about the expected value of the trade, using stops, developing a trading strategy, how to read chart patterns. And for each one, there's a written lesson. I can click on this and read the lesson. I can print off that lesson using the little print icon there. I can watch a video. So this video is, how long is this one? It's 30 minutes long. And watch that as many times as you want. Some people watch these videos 20 times to make sure they understand it. So all of that is online. So those are the foundation theory lessons, and then we have the specific lessons on my trading strategies. So my favorite day trading strategy is the worm strategy. I do that almost exclusively now because it's just working so well. But strategies come in and out of vogue sometimes. So intraday pullbacks has actually had a good day today. But generally it's been underperforming the worm strategy. So I pretty much just focus on the worm strategy. For those that want to swing trade, then you have something like the simple swing strategy, or kind of a hybrid swing position strategy is called the action breaks right here. And there's no assignments or tests in those. There's just lessons and videos. The assignment really is to do it. And the test is whether you do it well enough to make a profit, I suppose. But through that learning process, I'm always there to help you. You can email me anytime, and I only do that for my students, obvious reasons. I can't do it for lots of people. There's just not enough time in the day, but I help my students through the learning process and give them guidance and support and make sure that they're following the rules properly. So what is the Active Trader course? You have the foundation lessons in the Stockscores Education Center, access to my strategies, access to my market scans on Stockscores, email support from me. You get access to our tools for 6 months for free with the course, and then you can renew that access for $300 per year. You get my real-time indicators for TradeStation. Again, you don't have to use TradeStation because the other option is Active Live. And with Active Live, you can watch me and my screen, and as it monitors the market for day trades. It's done in real time, live webinar. I don't talk a lot. I used to talk more, but I don't need to anymore because the computer does the alerting now. And the computer's way better at it than I ever was. I talk before the market opens. I talk in the last half an hour. And otherwise, we just let the computer, and the computer will actually talk. It'll say strategy alert, and it'll even say the symbol. And then there's a little pop-up window on the screen that comes up so you can see what the symbol is. Everyone that takes Active Live for the first week is a little overwhelmed. It takes a little bit of time to learn and do, but a few days of watching and you'll get it. So the reason I say that is because anyone who takes Active Live, just for the first few days, kind of watch. The market's here forever. There's no rush. Watch, see how it works, ask me questions before you start actually using it to generate trade ideas. So I'm doing the work. I say I, meaning my computer and I do the work to find the trades so that you and also me we can focus on making them. The fact that the computer is doing all the mouse clicking and everything allows me just to focus on getting the trades filled. Now, Active Live service is only available to people that have done my Active Trader course. I don't want a lot of people in the Active Live webinar, because if too many people do it, then it makes it harder to get in and out of the trades. So the best way for me to put a cap on the number of people that can do Active Live is to require that you first take my course. Now here's what Active Live looks like. So there's a few different windows here. This middle window is all of the buy signals. You can see the time, so 12:32. As we go down the list, we get earlier times. And you can see the capital required for $100 of risk. You can see some have quite a variance. This one is $100,000, and then I've got one that's $8,000. That's before leverage, so take these numbers and divide by 3. So this trade took whatever 8,500 divided by 3 is, just under $3,000. Some of them are, $2,300, 79. There's a lot of variance there. And so for someone who has less capital, you're going to focus on the trades that require less capital. This screen on the right, which is moving right now, is my short sell screen. And again, it's giving entry signals on shorts. These numbers, whoops, stopped. I didn't want it to stop. Let me just see if I can pause it there. Oh, how do I pause it? Okay, so these numbers right here are the reward for risk earned. So this one's at 4.91 RR, 4.67 RR. This is the maximum reward for risk earned. So this trade went up 8.6 RR already. So that's just some of the ways that we can sort of keep track of our trades and see how they're working. And this was done right at the end of the day. You can see the time in the lower right-hand corner. Oh no, that's 12:33 Eastern time. So that was in the middle of the day. And all of these symbols that are in here, if I go back to that spreadsheet and go to the short sell side, we should see that for May 29th, those symbols will be in there. So got to find them here. I don't know why I'm doing this, but just to show you how it all works. So here's Hertz. And if we go back here, Hertz is on the list. Oh, I can't find it now. What time was it at? It was at 12:02. Whoops. Doing a good job of screwing this up. So 12:02 HTZ, where is it? There it is. So at 12:02 it was up 3.33 RR. Okay, everyone see that? Now if I go to my spreadsheet, what we will see is that by the end of the day it was at 11.33 RR. So it really went down a lot from the 12:02 point. Now if I go look at the chart of that stock, HTZ, you can see that, why is it not plotting? Maybe I think I've got this on the buy chart. Hold on a second. Let's do it on this chart here, HTZ. There we go. So the entry time on HTZ was at 12:04. At 12:33, which was right there, it was just over -3 or +3 RR. And you can see that it continued to fall all day. That's how we get to that 11.33 RR trade. All right, so that's a little sense of how Active Live works and how it all works with that database. And I'm going to give you the results in a moment, so stick around for that. I just want everyone to see where the results that I get in that spreadsheet come from. Now, the investor course is very similar to the active trader course. It just doesn't give you the active trader strategies, and it doesn't give you the TradeStation indicators because you don't need them. You use the Stockscores market scan. But for those who aren't interested in day trading, who want to take a longer term approach to trading, the investor course is the way to go. And the webinar I do on Thursday will go into that in more detail. I'll show you how I do market scans and all that sort of thing. Now, in addition to the online training, I am doing some live webinars coming up in a couple of weeks. So on Saturday, June 9th, there will be an overview class, and I'm going to walk you through all of the important concepts to my approach. And then the following week, Monday, Tuesday, Wednesday, we will practice doing market scans. That's for the longer term trades. So we're using the Stockscores market scan tool and just practice assessing charts and looking for good opportunities. And then the other thing that you get if you do the Active Trader course is you get 1 month of Active Trader Live for free. So that is normally $195. If you register for the class before June 7th, then you'll get a free month. You don't have to use it in June. You can use it in September if you want. Whenever you're ready, you have a 1 month credit. You just have to email me when you're ready to use that credit and watch for a month. And I think you'll find it really quite valuable and informative. So the special offer then is anyone who registers for the Investor or Active Trader course before Thursday, June 7th at 11 p.m. Will get the overview class for free, the market scanning classes for free, and 1 month of Active Live. Now, if you, I know some of you bought my course 2 months ago. Anyone who bought the course so far this year will get this as well. So don't feel like you're missing out because you haven't bought it yet or you bought it already. Now, some people bought last year. They already got the free offers from last year. So if you bought basically since the end of November, anyone who bought since the end of November last year until now will get the overview class and the market scanning for free. You may have already used your free month of Active Live Trading. If not, you have that there. You just have to email me when you want to give that a whirl. So that's the special offer. Course pricing. This is Canadian dollars, $2,495 for the investor course. The active trader course is $3,495. I want to stress that includes the investor course, but it also gives you the active trader stuff. Hey guys, I realized after I ended the webinar that I forgot to talk about the performance of my day trading strategy. So let's do that quickly. I'll just edit it on to the end of the video that I recorded of the webinar. So to accurately assess a strategy's performance requires analyzing the performance of all the trades that meet the strategy requirements. You can't cherry pick them, you have to include them all. In doing so, you remove bias. And so what I've done is taken all of the trades that I have, or really shouldn't say I have, but the computer has identified based on the rules of my strategy from February onward and put it into a spreadsheet. And I showed you that spreadsheet earlier. The rules are what they are. The active live webinar shows these picks as they come up, and I just basically summarize them in a spreadsheet, and then I put them into a chart. And so this chart that you see on screen here, well, that's the spreadsheet, demonstrates the growth of reward for risk over time. So what does that mean? So if you do a trade and you buy it at 10 with a stop at 9 and you sell at 13, you make a reward for risk of 3. What I've done is recorded the reward for risks for every day since February 1st, just to show the equity curve, because what we want when we're trading a strategy is to see an equity curve that fairly consistently rises from left to right. And that's what we have here, which is what's important. So you can see that currently we're at about 540. Now, I want everyone to recognize that this is the cumulative reward for risk with a maximum of 20 trades per day. Many days give far more trades than this. In fact, if you took every trade, the reward for risk would be much, much higher. What I do in creating this line is I say, okay, let's just max it out at 20 trades per day, because that's kind of the limit for most people. And in fact, some people can't even get to 20 because they don't have enough capital. But let's max it out at 20 trades and just use the average. If we go over 20 trades per day, let's use the average profit per trade to extrapolate this line. As an example, today, the reward for risk was 96 just today alone, but that was over 93 trades. So realistically, is anyone going to do 93 trades? No. So I've limited it to just 20 on any particular day. Anyway, what's important here is that the total reward for risk since the start of February, with a limit of 20 trades per day, is just a little over 500. That's a little better than 100 per month or 25 per week. And if you take your risk amount, let's say you're willing to risk $100 per trade, assuming you have sufficient capital, that's $2,500 a week, $10,000 a month. If you're risking $1,000 per trade, then you're over $500,000 over the test period. If you're risking $50 a trade, just multiply 50 by 500, and that's how you get your number. So what's important, again, is that risk-reward equity curves have to go up from left to right and fairly consistently. If they have a lot of volatility, that gets frustrating to trade. And this one's pretty good. In the middle of April, we had a little bit of a sideways period there, but other than that, it's been pretty consistent. So wanted to share that, and I forgot in the presentation, and so I added on here. Hope you enjoy that. And I want to thank you all for joining me. I will send out a link to the video as soon as I can. Have a great night, and remember, we have another webinar on Thursday where I'll show you my position trading process and how I use the Stockscores website for finding trades. Especially if you don't want to be a day trader, make sure you catch that one. It's another free one, so join in on that. And hopefully we'll see lots of you on Thursday. Have a great night.